Really quick, what do you think about that Citi note there? Just getting kind of a bit nervous about some of the positioning.
Sure, we're all a little bit nervous. The market's a little stretched. I just don't see a ton of downside. The farthest we've gone down this year is 8%. We're hitting the best quarter of the year. Q4 is by far the strongest quarter in the history of the S&P 500. November is the strongest seasonal month in December. Earnings so far have been pretty decent. I think it's not going to be quite the same 3-month drawdown. That would be a 2018 situation. I just don't see 10% in the cards with so much 6.5 trillion still in money markets. I think it's a little bit overblown, and it's likely we're going to have a lot of dip buyers like we saw in August and September when those little dips, they lasted maybe 5 days and that's it. So yeah, overbought, little stretched, right, but not a threat to the bull.
All right, with that bullishness in mind, Vicky, what's your word of the day?
It's waiting. Everybody is waiting for something terrible to happen. We're waiting for the election, or we're waiting for PCE, or we're waiting for something horrible to happen in this market. And stop waiting. You need to get off the sidelines. If you're sitting in the money market, this is still a bull market. We're middle innings here. There's more room to go. And there's always going to be a reason not to invest. And we see this time and time again. People get wrapped up in geopolitical events and they say, no, I want to sideline this, or I need to wait and see how this plays out. But if you wait and see what happens next week with earnings, or what happens with the election, you could be missing out. So we are strongly encouraging people that are sitting around waiting for this bull to end. This might be a 2020 or 2009, and you probably should start legging yourself in, a little dollar cost average, minimizing your timing risk, but stop sitting around waiting for the end of the world to happen. It's likely not going to happen.
All right, that's a pretty strong statement there, Vicky. Speaking of all this waiting, a lot of people are waiting for the Mag 7 to report, the rest of the Mag 7 report next week. We have 5 of them reporting next week. I know you're waiting for it as well. I want to get your take on what our Jim Cramer on Mad Money said last night about the Mag 7 and some recent earnings that might influence those companies.
Big tech made a big comeback today because of the bond market, not anything to do with the stocks themselves. So keep in mind that the pause in the rally is temporary, even as you should still own some of the Mag 7 for diversification. They used to be high flyers, but now they've become lovey blanket stocks. Money managers can't live without their lovey blanket stocks when there is genuine economic risk involved in other kinds of stocks that they didn't expect or didn't think that would happen.
All right, so the graphic behind Cramer kind of spells out his thesis there, that they're a flight to safety with their earnings coming up. Do you see that trend continuing? Does that possibly actually lower the bar on expectations for those companies because they're seen as a safety play?
I think they are, and you're seeing huge runs to safety. Look at what's happening to gold, and they are very quality companies that are going to print free cash flow. Absolutely, without a doubt. You're talking about companies that are generating earnings of $20 to $40 billion a quarter. They're massive. So yeah, there's safety in large cap, and we love companies with strong free cash flow, and those are the companies we want to own right now. Both the mega cap tech as well as other large values. We are recommending you look outside of just those 4 companies. Nothing wrong with the quality play. Understanding these companies have continued to have a history of growing earnings, and more importantly, a history of growing cash flows and being shareholder friendly with buybacks and dividends. They're a great place to stay because their balance sheets are also strong. And who wouldn't lend money to Amazon right now? If they wanted to raise capital, everybody would be lining up around the street to send more capital to them.
All right, Vic, let's get to your pick. It's NextEra Energy. Big gainer this year as utilities have got a big run up on the so-called AI trade, up over 30% year to date. But if you look over the last month, pull back along with a number of other utility names. A lot of people kind of feel like that utility trade's over. Why are you so bullish on this name?
There's so much still to come in the utility trade. They're talking about the fact that these data centers need about 5 gigawatts. So they're being approached and saying, hey, can you build me basically a power station that's the size to power a small city? That's how big these data centers are. And Xterra is one of the only that are uniquely positioned to do that. They maybe started talking about restarting the Iowa nuclear plant. And then they're in a very regulatory friendly state in Florida. And so their ability to continue to increase funds in there, even though they're regulated, 8% EPS growth, totally doable.